Today on the CEO Barbecue, we're looking for copper and gold in the Chapais district of Quebec, together with Kintavar Exploration. For a bullet point summary of this and all other CEO interviews, go to researchtalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this video, which means there is a level of bias, and this video should not be treated as a recommendation nor as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. This interview is intended only for experienced speculators because mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an unbiased, independent investment advisor with a good long-term track record because your capital is at risk. For this company specifically, you should understand that there is an additional level of bias because the company's chairman, Stephen Stewart, is a friend of mine, as well as an investor in my company, and I'm often an investor in some of his companies. And although I don't own shares of this one yet, I might own them in the future without a prior warning. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Kintavar is listed as KTR on the TSX Ventures Exchange, where over the last 3 months, the average volume has been about 162,000 shares. The stock's 52-week high is 7 cents and its 52-week low is 1 cent. With a market cap of 14.5 million Canadian dollars and just over 222 million shares outstanding, today this is a 6.5 cent stock with a 50 and the 200-day moving average at respectively 2.5 and 1.8 cents, which means the stock is now trading well above both of them. Now, this is where I normally start giving you a bit of, or diving into the insider ownership and a bit of an overview, as well as the company's financials to tell you how much money they spend on marketing versus how much money they spend on drilling and so on. But Kintavar has just recently been restructured and refocused, really, so that overview might not make too much sense on a historic basis. But those are still important topics, so I will be asking about them later on in the conversation. In a nutshell, after recently resetting the story, really, by closing the Roger Copper Gold Project acquisition and appointing Peter Cashin as CEO on September 16, that was this year, Kintavar essentially pivoted from an intrusive model on the project to a VMS project. So we're talking copper, zinc, gold, and potentially silver. It's a VMS thesis with in-hole geophysics on legacy holes targeted for completion by the end of this year. In the deal, by the way, the vendors of the property, OrCap and XXIX, each took 20% of Kintavar, and Kintavar is thus now part of the OR group of companies, which again, as a reminder, I do have multiple conflicts of interest with some of its members. So do keep that in mind. And as always, I would like to remind you to be cautious because your capital is at risk. And because of not being able to go through their financials now, please do that yourself. Go to setterplus.ca and look at the company's full financials. Specifically pay attention to their full year financials once available, but the quarterly ones are important as well. That, as well as more detail on timing and everything else between now and whatever else is happening by the end of this year will happen later on in the conversation as well. But for this to actually become a conversation, I'll have to shut up already. And Peter, I'll give you the word here. But first of all, thank you so much for sitting down with me today.
Thanks, Antonio. Pleasure to be here.
Pleasure's mine. And since this is your first time on the barbecue, we will have to go through the smell test. But just before we start doing that, I want you to talk to me about this restructuring of the company. How did it come to be? Why is now the right time to do it? What are you seeing in it? And yeah, just why?
Our group is always looking for opportunities for good properties, good deals. One of the present CEO of one of our sister companies, XXIX, was on the board of Kintavar, and basically they were liquid. They weren't going anywhere. They didn't seem to be moving. There was no interest in their stock. So the suggestion to Stephen Stewart was that, hey, this is an opportunity for us to roll a non-core asset. And Roger was a non-core asset in XXIX with their focus mostly on Opamiska. So that got rolled in, and the suggestion by the OR group of a transaction whereby Kintavar would acquire XXIX And in turn, the OR group would take both management and board control of Kintavar. And it's Kintavar for now. Ultimately, we're working towards a rebranding, which is a renaming of Kintavar into Original Metals Corp. And that will happen over the next 30 days.
Mm-hmm. What about the purchase price, though? And Kintavar does have shareholders. Kintavar, I believe, itself was a spin out. So we'll talk maybe a little bit about that later on. But why do you think Roger is worth I believe it's almost 90 million new shares that are being issued of Kintavar. So what about that purchase price?
85 to be closer. It was an all-share deal. I think, I believe the transaction was valued at about 2.3 million equivalent. And I think that's fair value for the asset. Roger has, in combination, about 535,000 ounces of gold equivalent. So that's a reasonable shake on the valuation of the property.
We will definitely be back to some of those things, as well as the OR group's involvement in everything that you're talking about later on. But this nicely ties into the first of the 10 smelt questions, which is you, because you're essentially going to be leading this company. Why you? Why are you the right person to run Kintavar or Auriginal? And have you made money for shareholders before?
I'll go through my history. I've been in the mineral exploration sector now for in excess of 40 years. I've worked for majors and juniors. I've worked about 10 years for Inco. I ultimately ascended to become the manager of Eastern North American exploration for Inco. Left them. I did some corporate development for gold companies. That's where I met Philip Cloutier of Cartier. Then my mentor brought me in. I founded a company by the name of Quest Rare Minerals. It was Quest Uranium at the time, in 2008, whereby we made a significant rare earth discovery in 2008, 2009, just in advance of the big rare earth run. We moved the stock price of Quest at the time from about 6 cents to $9 Canadian, or about half a billion market cap Canadian. So that was a significant success. I made my investors a lot of money. We did a large financing in 2010. Basically, we doubled up the share price for our investors within 6 months of the close of a hard dollar flow-through financing that we had. It was syndicated. So I left Quest. I'm really an exploration guy. I find things. When I was with Inco as a manager in Quebec, we found additional gold deposits outside of the Casa mine. I had a regional exploration program in northern Quebec on the Troilus belts. We made a base metal discovery. It was small, mind you, but it was still in support of the model that we'd established. Quest was a success, and then I rolled. When I left Quest in 2015, I brought a second property with me that I had discovered while with Quest. We called it Crater Lake. So we rolled it into Imperial Mining Group, and I founded and launched that thing. We took it to a PEA. And at that point in time, they were moving to a feasibility stage. That was a scandium rare earth project, which is interesting. And I really delved deeply into all aspects of the development of any kind of mineral deposit, including engineering, metallurgy, geology, structure, even down to number crunching and value attribution to assets.
You currently held any other positions, board or executive positions with any other companies?
Yeah, I'm a director with a rare earth company, helping them out with the financing. I'm actually the chairman of a private company that has a porphyry copper moly project in northeastern Quebec. That's not really an operational role, but my full focus is on Kintavar and developing shareholder value in it.
So what you think, like 100% of your time goes toward Kintavar then in that case, or how do you see that?
That's correct.
Okay. How much of the company do you personally own? Again, you just came in, so have you gotten any shares?
I've got about 100,000 shares. I mean, my intention is to increase my position over time.
How are you going to do that? Is it through incentive plans within the company, or do you want to be
No,
buying in the open
I'm
market?
personally buying shares out of the open market.
Okay.
And then, of course, there'll be options from my joining the group.
Yeah. Yeah, of course. Well, what I'm looking for here, of course, Peter, is skin in the game, especially with new CEOs, important because you just came in. So how do you build that out? Is there a target? Like, do you want to make Kintavar a specific percentage of your portfolio? Do you want to put a specific number of, amount of money in it? Or how do you see that skin in the game?
Just to give context, the Imperial Opportunity was the largest single shareholder. I've had in excess of 8.5 million shares in the company, which was, at the time of inception, it was about 13% of the shares in Imperial Mining. So I don't know if I'll build my position. I don't know if I'll have the opportunity to build, because a lot of those shares came from the transaction of me rolling in and do my Crater Lake Scandium Rare Earth project. And we did an RTO with a Quebec gold and base metal company, which again was illiquid. So the kinds of transactions that we undertook with Kintavar was very similar to the one that I did to create Imperial.
Right. Okay. So you do essentially plan on what you're saying here, and correct me if I'm putting words in your mouth, but are you planning on building a significant to you position or a significant amount of skin in the game here?
I am.
Okay. Well, also why I'm asking this, or also important to me here, is to understand who owns your shares and how much of that can you not control, but at least understand. Like, is it being bought? Is it being sold? Obviously, ORCAP and XXAX are each taking 20%, if I'm not mistaken, rounded up.
19.9. So they don't have to be a reporting issue. Where the parent company of the original Kintavar, Geomega, has about 16% of the shares. So right off the top, we're controlling about 56% of the shares.
What's happening to those 16% shares with Geomega? I thought they were supposed to be spun out when.
I don't know I don't know the details of the transaction. I saw that there was reference to somewhat of a class action suit on the part of Geomega shareholders, but I don't know really the details behind that yet. I mean, we're just getting to understand the internal obligations Kintavar right now. I mean, the transaction just happened this Tuesday, or we just got control of the bank account, and this afternoon actually in Canada. So over time, we're going to have a better handle on exactly what the obligations are. But that's really out of our hands. That's completely independent of Kintavar right now.
Yeah. Well, but it's so, I mean, to your point, it would be good to understand those shares, what are they planning for those shares? And then if something happens and they want to let go of them or, issue them to their shareholders, are you going to be able to mop up any potential additional supply that comes into the market?
Yeah. We know that there are about 20 million. There's a group of shareholders in around one of our properties in southern Quebec that control about 20 million shares, and we're already in conversation with them on the possibility of either acquiring those things or securing them anyway.
Oh, so across essentially that would be okay. That's interesting right there. There's two things that I often wonder about with groups like the org groups, like the org group, but one of it is, of course, how independent is the board really when a new group comes in, takes control of a company. So that's one, but also maybe more importantly, how much support or how much of their time do you get as Kintavar, right? Given how they're involved in multiple companies, right? Charles is, and Guy Labelle, he also is. He's the CEO of XXAX. So how does that work? Are you getting any? Are you getting decent support from them? Essentially, is what I'm asking.
Yeah. Well, by way of background, notably the Imperial Opportunity that I started up, I was basically the head cook and bottle washer on that one. So I was doing everything. And one of the criteria for me to join the R group and accept this transaction opportunity was the kinds of back office support that I would get from the group. And so far, so very good. I get support on the financial side. Stephen's very supportive of what I'm trying to do going forward. The back office people are great to work with, and I really like the environment.
Do them or you or any of the other insiders personally own a royalty on any of the projects that you have?
No, there are no royalty holdings on certainly on Roger. Roger and we're not. There's a couple of small holdings and other properties other than our principal flagship properties within Kintavar.
Mhm.
But those are we're not likely to hold on to any of those, or certainly we're looking at the potential of vending them or optioning them to other parties.
That is a topic that I did want to talk about, and hopefully we'll get to that later on in the conversation.
Okay.
Still on the
Sure.
same topic, though, and still within our smell test, if you will, Peter, and still talking about incentives, specifically 2025 incentives, because, well, 2025 is almost over. So maybe talk about 12 months, given that you've just restructured this company, as you said last Tuesday. How are you going to measure success internally from here on out? And specifically, why I'm asking that is because I'm trying to better understand how executive compensation and director compensation that we just talked about is going to be determined to reflect that potential success, as in what are the KPIs going to be based on?
Well, I've got a milestone with which to address within my contract of employment, and it's over a 12-month period. And I personally set a series of objectives, and what Stephen has set is on the basis of share price performance, and as well as the ability to raise additional capital on the markets. So. And then that would usually lead to either additional options or RSUs, DSUs, which haven't really been specified, or a cash bonus.
Right. Okay. What is that success going to be based on? And this might be, or how you define success is an interesting part, because this might be a good segue into talking specifically about the business plan. What are your objectives here for call it the next 12 months? Where do you want to get Roger to in order for you to consider that a success?
Well, just to talk about the model a little bit, and I think that's the big driver here. I worked Roger in the early parts of my career. It was called MOP2 at the time. I did a lot of the original drilling. I brought the project underground. I formulated the initial model, and it seemed to have stuck. So when reviewing the data, I recognize that there is a possibility and strong potential for massive sulfides, and none of the necessary tools that were required to fully evaluate that possibility were utilized by the project managers prior to us. I'm measuring success on the basis of, number one, the work that we're currently doing will identify massive sulfide targets. Number two, diamond drilling of those targets and looking at an economic deposit. And I'm setting a threshold, a typical average size of an economic massive sulfides between 5 and 10 million tons. Mm-hmm. So I'm setting myself that as an objective. But more importantly, I think if the model works, and it seems to be certainly applicable right now, the model works is we're opening ourselves up to a regional play here, even like a mining camp level play, because in the area that we are in Chibougamau, it was never really evaluated for massive sulfide potential. Mm-hmm. And if you think about massive sulfides in the early parts of my career up to the 1990s was an extremely attractive model, but then rare earths hit and lithium hit and gold hit. Gold's always popular, of course. So I think I'm looking at the upside. We're using Roger as a bit of an anchor, and if our model success is successful, and the idea being is to expand our property position to secure equivalent type geology with the view that we think that there's other deposits, because usually massive sulfides don't occur in isolation. They tend to be clustered. So if you've got one, the chances are you're going to find others. And that's kind of like the objective here.
Well, it seems like you'll be essentially attempting to eat an elephant, and the way you do that is bite by bite, right? Maybe talk to me about the specific milestones in that process. Like if we're talking, say, 3 months from now, what will you have done for shareholders, and how do you see that step-by-step process going?
Well, I'm trying to be systematic, and my history is that I provide full focus on the work to evaluate the opportunity first and foremost. Promotion, investor relations, all these promotional support aspects, I leave at a later date. I want to make sure that I'm convinced that when I present to shareholders that I've created something of great value for them. So certainly the first 3 months or to the end of the year, the objective here is to complete. I've gone back twice now onto the property. We've gone back into the historical core, then supplemental sampling and logging. We're applying some geochemical tools that are critical for the assessment of the fertility of the rocks on the property. We've relocated a number of the deepest holes across the entire strike length of the Roger project, which is about 1.8 kilometers, to undertake downhole geophysics. So the idea being is looking for off-hole conductors or trying to develop vectors of where the center of the system is. And that would take us that would, number one, confirm our model. Number two is in the early part of 2026 is go back with diamond drilling, kind of like use the same approach that Ore Resources did at Louiscore, a deep set of widely spaced holes, because of the search radius of downhole geophysics is about 150 meters from the axis of the hole. So, and undertaking about a 250 meter drill section down about 500 meters, I think would allow us to fully assess the potential of the interface that we've developed.
Mm. Given where you are in Quebec, so accounting for topography and infrastructure and everything, what would Roger have to look like, both from the grade, but also from the size perspective? You were touching upon that earlier also, but it'd be interesting to talk about that now. And why I'm asking that is because I'm thinking, what does it look like in order for it to be potentially interesting to potential buyers here?
Like I say, in terms of size of a VMS, you're looking at on average 5 to 10 million tons. Probably rock value in the order of about $200 a ton, $250 a ton, if not more. What I find particularly attractive, and if you were to look at an analogy, with the kinds of gold grades in the massive sulfide sections that we've observed within the historical core, it's extremely gold rich. So unlike most typical massive base metal sulfide, which are copper, zinc, and silver, the addition of grade, and I'm not just talking small grade, I'm talking up to 27 grams per ton gold in some of the base metal sections. You can deal with a much smaller deposit and make significant returns. So I think as a bare minimum, calling a $250 a ton, I think would be the minimum value proposition of this kind of material. Mm-hmm. Because you could add the premium of gold onto that value.
And that, of course, would be $250 of recoverable minerals, which is an important part with VMSs as well. Right. I am hoping we'll do a geological deep dive sometime soon, but you've probably already looked at this metallurgically. How does this look? Is it looking like that would work?
Well, VMS metallurgy is extremely understood. And I compare that to my experience with the rare earths, where each different deposit has its own formula for recovery of your pay minerals, at least base metals. It's fairly coarse if the metallurgy, and there's lots of analogies within the Abitibi belt for recovery of economic recovery of metals. If anything, geologically and geochemically, we're probably very comparable to the environment that created the LaRonde deposit. And LaRonde deposit is a 59 million ton VMS, but it's an 8 million ounce gold resource as well, in addition to copper, zinc, and silver. And LaRonde is extremely unique compared to a lot of the other VMS mines within the Abitibi itself. Mm-hmm. And we're seeing some strong analogies to LaRonde right now.
Hopefully we'll be back to this. I know Charles knows quite a bit about Roger, so we'll maybe get him on as well, and we can talk about that. What about potential suitors up in Quebec where you are? Are there any large companies already active in the region? Well, because the VMS may be a mid-tier company, so not necessarily a major, but companies that might be interested in that kind of an asset, or would you? And I understand this very, very forward looking, but if you had to guess, to the best of your knowledge right now, who would an asset like Roger fit with?
It's interesting. Glencore gave a presentation at an investment conference in Quebec City in June, and they have the horn smelter, and the government, if that were to shut down because of lack of feed, there'd be a significant environmental liability, and the government just doesn't want to get stuck with a bill. Neither does Glencore, for that matter. So I think in that scenario, I think we'd be able to negotiate a favorable smelting arrangement with Glencore. And that would, there's two things that are happening right now. The Quebec government's considering, there used to be a rail line from the Chapais area down to the Abitibi directly. That was removed, I would think, in the 1990s. The government's now looking at reestablishing it. So ultimately, we would have a concentrator. There's even talk about the possibility that if Opimiska were to go into production and a new concentrator would be built there, that we would be able to toll feed our material into that particular flow sheet. And then from there, the cons would be moved down to Rua and Noranda for processing by Glencore.
Mm-hmm. Well, that's actually bringing up an interesting topic, maybe in and of itself, the history of the asset, as that may generate some more questions, and that'll make sense in a second. But who discovered Roger in the first place, and what work has been completed on it since?
It was discovered in 1979 it was a joint venture between Matagami Lake Mines, which were the discoverers, of course, of the original Matagami Lake VMS deposit, and a junior by the name that I work for, Flanagan McAdam Scotia Resources. So we really intensified the amount of work when I came into play in 1985 onto the project. So we did about 3 years of diamond drilling. By the end of 1987, it got to the point where we had a lot of mineralization, different structures. We didn't understand the structural context and the direction of the mineralization. It was buried under a sand plane. So my recommendation was, let's go underground on it, do some underground drifts and do some sampling, do some structural mapping and geology, and try to understand what the principal structure is. And some of the more recent work that we've done, if indeed we believe that there's a VMS here, but it's a gold-rich VMS, all of the copper gold deposits in Chibougamau are in northeast southwest structures, northwest southeast structures. Mm-hmm. And back in my early days on the Roger project, I recognized that there was one of these structures right in the middle of the thickest part of mineralization at Roger. So the thinking is, we might be dealing with an original VMS with a gold overprint. And that's because when gold's running through along these structures, it's looking for either a structural trap or a chemical trap. And if Roger's so loaded with sulfides, there's your chemical trap, and it probably caught up all the gold as it was running through the system.
Mm-hmm. Well, also a mandatory question here, Peter, especially when I see assets that have been worked before in stable and desirable jurisdictions. The question for me always is, why did anybody let it go? And if the thesis that you have for it now is workable and could be economic, and notice the could, why hasn't someone developed it by now?
For the most part, it was run by SOQUEM, which is the Quebec government's exploration entity. Really their objective is to take assets, develop them up to a point where advanced studies are done, and then they usually send it off to interested parties. The porphyry model, which is, I established in the 1980s, I think carried through. And sometimes, you're so set on a specific model, you've had the blinders on, and that's where the focus is, and that's what you look at. So because it was a porphyry, it's not a high grade deposit. It's like a gram per ton goal. So it's not certainly up today's gold prices. It's interesting, but when your average price was $1,000 an ounce, it doesn't make for a very attractive acquisition target.
Mm-hmm. And so you think if it was a different market, it would have been worked or sold by now?
Possibly, yeah.
Hmm. How are the community relations up there? How many groups are you dealing with, and what are you allowed to do under the current structure or agreement that you have with them?
The principal First Nations community is the Bugamo Aji Cree. They have a settlement not far from the property. They would be ultimately our primary group with which to undertake public consultations. If indeed, we have to do public consultations to obtain an exploration license, but certainly if we were to advance that, we would have to have more comprehensive discussions. And then we have to, under the new regulations of permitting, we have to have communications with adjacent communities. So we're talking Chapais and Chibougamau. Well, those discussions have already started to happen. Aji, I used a lot of some of the elders of the community. I used to use intensively in support of the exploration program when I was there in 1988, and I have a very good working relationship with them. Certainly, even a personal relationship. When I left Chibougamau, one of the clan came and offered a gift of moose hide, beautiful moose hide gloves, and that's usually a sign of appreciation of the years of support that we gave them in terms of providing them with solid employment.
How far away are you from Chapais?
Chibougamau was actually closer. I'm 5 minutes drive, or just as a matter of fact, when I lived in Chibougamau, it was at the northwest corner of Chibougamau, and it's about a 5-minute drive. So it's accessible directly by forestry roads and principal forestry activity roads.
How could that be a challenge though with the community? I know, for example, Opimiska XXAS's project is very close to Chapais, and so that's something that they've had to work on for a while now. How does that work for you? Could the community being that close be a challenge?
Look, Opimiska is adjacent to the town, the edge of the town. So, they obviously have a different circumstance in terms of public sensitivity. We're well away from the center of the city, so we're about 5 kilometers proper from the edge of town.
Okay.
So I certainly we're at a significant distance from Chibougamau relative to Opimiska and Chapais.
I understand that also means your proximity to road, water, power is there, but for a potential, and again, it's very forward looking, but for a potential mining operation, you would need different power, right? It would need to be heavier power lines and so on, and heavier roads.
High tension wires coming down from James Bay and substations. The Willem was a fast producing mine. It's within 5 kilometers of the property with power line to it. We'd be able to draw off of that. There's a large sawmill about 2.5 kilometers, which is significant power to run the plant. So from a base case, the infrastructure is very well developed around the property.
Right. How is it in terms of permitting? Can you go to drilling immediately or whenever you want, or is there still more paperwork to be done?
No, it's because we're a new project and we're a new entity. Roger hasn't been worked since 2018. And under the old rules, we didn't require the intensity of approvals for work permits, and it'll be in the order of 3 months from if I were to start now, to in anticipation of a diamond drill program startup in February, March.
Okay, so if you start in February, you should be able to drill by May. That's what you're thinking.
No, I'm talking very soon.
Okay.
We don't have to be very, very detailed, but we have to at least outline the area of interest that we would undertake work and the kinds of work that we intend to undertake. once we get closer to the startup of the project, and when we have preliminary approvals of that application, at that point in time, we'd have to be a bit more specific, site specific of where we intend to undertake the work.
And so you're thinking that the probability of you drilling next year, is that, how's that looking?
It's high. I mean, like I say, we're starting on the permitting process now.
Right.
For anticipate, because the preliminary work that we're undertaking doesn't require permitting approvals. Prospecting and resampling of existing core, and even doing the downhole geophysics on existing holes doesn't require that level of approval. It's the diamond drilling that will require the much more detailed approval process.
I know it gets very cold in Chapais. How's the weather for you up there?
Lovely. I mean, matter of fact, January, February is minus 35 degrees C. And I lived there for 3.5 years, and I actually enjoyed it much more than the winters in southern Ontario, which are minus 15, minus 20 degrees.
Right. So, but is it, I mean, for exploration, I suppose it's workable, but it would probably be much more expensive to work in the winter, or how do you see that?
It's the other way. It's the other way. It's true, actually. It's access is much easier. Like you can literally drag the machine on any conditions, swampy conditions, etc.
How is topography and the general lay of the land there? Is it swampy mostly? Is it any lakes that you're dealing with close to you or anything like that?
No, we walked the property to spot the historical holes that we plan to undertake downhole geophysics, and I call it parkland. The underbrush is very sparse. The trees are very widely spaced. It's quite dry. There's one area in the property off to the south and west that's a little bit on the swampy side, but we could overcome that with in winter conditions.
What about like rivers or protected daisies or protected mosquitoes and moose or anything else that's protected on your property?
Not that we know of. I mean, I haven't done that intensive study, but for all my years that I was on the property, I never saw a large game on the property at all.
Is there no hunting seasons? I mean, for the First Nations that you're dealing with, would they require you to stop for a certain period of time so they can do their thing?
Yeah, that's natural in the fall, but we don't plan to undertake any work in the fall. The diamond drill will be done in the winter, and there's no hunting or fishing in that period of time. So it's optimal for a diamond drilling.
What do you expect the drilling costs to be then in that case? I mean, with the land that you're describing here, what would that look like? We've
done some preliminary inquiries, and of course I'm piggybacking off some of the proposals that our sister company XXIX is getting for their property. The circumstances of Roger in terms of distance from town and logistics are about the same as Okamiska proper. It's just drilling costs is sub $100 a meter. So my estimate is about anywhere between $250 and $300 a meter are all up. That's assays, geologist time, support infrastructure, transportation, and storage of the core.
Right. You would be asking then in that case, where would you be asking?
Sorry?
Where would you be sending the assays for results?
Well, there's a prep lab in Val-d'Or with, we've got a contract with a commercial lab that I've used intensively in the past. Once it's within their infrastructure, then they handle all the handling of material. So they prepare the pulps, they prepare the rejects. The pulps get sent down to the laboratory in Southern Ontario for analysis.
Southern Ontario, so that would mean 6 to 8 weeks for assays. Is that right?
No, actually, we had a batch of analysis that we undertook for the core at Roger, and it was less than 3 weeks.
Oh, interesting. Because what I'm trying to understand here, Peter, is when do you think we're going to see some assays? And I understand there's more work to be done before that, but it is drilling that really actually moves the needle. So just directionally, when do we see assays?
Well, ultimately, if undertaking the downhole geophysics this fall identifies a target, that our first drill holes are going to be into it. And the benefit of massive sulfides is you can actually do visual estimates of grades, certainly of copper and zinc. So, I mean, at least we'd be able to have pictures and report out that we're seeing visually in the core. And then so if we start in March or February, the first assays would come sometimes in March.
Interesting. Are there any legacy liabilities on Rogers, either from the government or community or environmental perspective, anything that you might be liable for?
Well, when we undertook the downhole program in '88, there's some muck piles, but they're fairly inert. There's one area that's it's a little bit sulfidic. I don't know if that's been assessed for its environmental impact, but it's not. We're not talking large volumes.
Mm-hmm. What I'm really trying to do here, Peter, is trying to understand what could your Achilles heel be? What do you think is the biggest challenge or risk for the whole strategy that you've talked to me about so far today? What worries you the most?
If we get to a production decision, it's that's I'm thinking down that road. I mean, that to me is the if you're going to talk Achilles heel on a massive sulfide operation, it's the sulfidic tails. But there's engineering that be undertaken to contain that in the first, so that's and you compare that to legacy massive sulfide projects where they didn't have the level of understanding of the long-term impacts of not appropriately fencing off sulfidic tailings, and a lot of that you had a lot of acid runoff that gets into the environment, and that just doesn't happen anymore.
What about between now and that, though? Because I understand that part is solvable and doable, and if you have something of merit that is economic, you make it work. If it is within if it is within reasonable boundaries. What about now and between now and then, though? Is that what worries you the most? I mean, I ask you about timelines of weather and infrastructure and everything else. It seems like it's not those things. What do you think what's the biggest risk between now and then?
I think it's more on the financial side, the ability to get financial support but I don't think there's anything related, certainly at the exploration level, that could cause a significant delay or Achilles heel of the project. And I'd say we're not. If you have sulfidic tails returns from your diamond drill, you can certainly contain that. I mean, there's obviously means by which to contain that in secondary tanks, containment tanks, but I don't foresee any potential problem.
I do want to talk about the financial side of things. We definitely will. I know you have some money now, but we'll get to that. But just project level from the technical perspective, let me put it that way. What would you change about the rocks if you had a magic stick? What's something you would want to see that would make it better for you?
Well, the problem is it's not a problem, but I think the lack of understanding of the true environment is a result of Roger sitting between two principal faults, and anything in between, including Roger, has been so transposed and altered and faulted to the point where it's anybody's guess as to what the original lithology was. And if I didn't have that constraint, I think a VMS, if there was one there, would have been found by now.
What are you doing to solve that challenge, or how are you tackling the challenge of better understanding the lithology?
The first thing I'm doing is undertaking detailed geochemistry, which is, like I said, that it's a critical tool in evaluating the fertility of rocks and favorable to VMSs. I've already reached out to look at university research and sponsoring some master's or PhD students to undertake studies. And that would include the mineralogy and all the other aspects, and truly trying to, use the tools that can bring back and gain a better understanding of what the true environment is. But from what I had seen in the rocks, from the nature of the chemical signature that I've seen in Roger so far, I firmly believe that the interpretation of the model we've assembled right now is a much more accurate representation of what's going on that property.
Well, you are doing, as I mentioned at the beginning, if I'm not mistaken, downhole geophysics, which you want to have out relatively shortly. What is that going to look like?
If we see the presence of a VMS, it will be a conductor, an electromagnetic conductor. If we're lucky enough, we might see it just off hole from where the historical holes are. One of the issues about geophysics in the area is the backstop to the Roger is a rock that is extremely magnetic, and it actually acts as a sponge to any geophysical signature. So there's a means by which to overcome that. What you do is, part of the program was sampling for geochemistry. The other part was actually sampling the core. So we undertake physical measurements of the nature of each individual rock type that makes up the package. And what you can do is you're looking at magnetic characteristics, electromagnetic characteristics, the chargeability, the density, and then you can input that into the hopper and act if there's a specific rock type that's causing you difficulties and masking the signature, a much more subtle signature of a VMS. You're able to see it because you can filter out the impacts of that particular lithology.
That might actually, once you have that data, that might be a good point to sit down with you and Charles and talk through what this thing really is and kind of the history, the geological history.
Lots of work that has to be done.
Yeah, that's something we can definitely schedule for a later date. Running the company, Peter, as I mentioned earlier, the historic G&A numbers are not really accurate for what you plan on doing, so not much point in looking at those. How much are you budgeting for G&A during the process that you just described to me?
G&A, I think I've estimated to be in the order of about $30 a month, $25 a month right now.
Okay. That's on the low end, so 25,000 essentially.
Well, don't forget, we have shared services here at the Org Group, so I'm able to take advantage of that. The first year, like I say, my focus is on the rocks and on the property. There will be an aspect of promotion, but we can do that a lot of that internally, in-house. Mm-hmm. In the instance that we get, I think, look, I've always said we're going to let the rocks speak for themselves. So that the whole focus of my whole focus is really in developing the project and confirming the model, and ultimately hitting off on a significant VMS.
So conferences and stuff like that, is that going to be in the mix for you? I know you're in Toronto, so PDAC makes sense, but something else, are you going to be doing something else essentially?
Correct. Well, there's a number of exploration conferences in Quebec. I'd like to focus on Quebec because it's called Explore. It's the Quebec Mineral Exploration Association has their conference in Montreal. The likelihood is I'm going to be invited to present Kintavar or Roger during the conference. There's another one in Quebec City, and that's at the end of November. That's the Quebec government's show, where they basically provide overview of their activities, but also they have industry participation and an opportunity to present wares. So those are the kinds of projects initially, certainly. In the first year, get us onto the map, talking to you, doing our own internal webinars and presentations, constantly updating shareholders or activities through press releases and updates on the website of our corporate presentation. Those are all things that we can certainly do in the first few months of the year.
Are you originally from Quebec?
I'm a Montrealer, yes.
Okay, so it's not Peter Cashin, it's Peter Cachin, I suppose.
No, it's Cashin, but my mother is French-Canadian.
Okay, that makes sense. But so you do speak French, essentially. That's where I'm coming from with this, because...
I'm bilingual.
Okay, yeah. Well, because it is, I mean, we're joking here a little bit, of course, but it is important, actually. I've been told when you want to go in, and try to find those Quebec funds, which can be relatively deep, but when you go to these conferences, you do actually have to speak French. So it is, it's important. That's why I'm asking.
That's
and also,
correct.
No, go ahead.
Well, I was in Chibougamau, which is a unilingual French town, and Up to that point, although I had an ear for French because it was spoken in the home, I really never had an opportunity to practice it, and basically it forced my hand once, so I see the sink or swim, so you overcome some of the shyness, and you start conversing, and with practice you improve on it.
That certainly is true. I do speak French myself, being from Belgium, but I don't use it all that much because I'm on the Flemish side of things. But still, you're definitely right. What about also why I'm asking you about marketing here, really, Peter, is because I'm thinking about raising capital, of course, and how much you might have to do that. Remind me, how much cash do you have right now?
4.8 million came along with the transaction. And then, that's hard dollars. And in this market, hard dollars are probably the hardest thing to raise in any financings. The likelihood, and where Stephen Stewart, myself are already starting to approach major investors, high net worths, and the Quebec funds about the potential of a raise before the end of the year.
Okay.
And that would likely be flow through, like charitable flow, where you can see a significant premium to your share price as long as you bring in a back end. So you have your own shareholders to come into the back end to buy the shares off of the charitable organizations, usually at a discount to market, but at least you know that they go into firm hands, whereas flow through conventional flow through, you don't have that control. And the worry is always after 4 months and a day hold, it blows back in your face. So it's a much better circumstance.
Yeah. Why raise capital this year though, before the end of the year? I mean, you said $4.8 million. That's a lot of money. At $300 a meter, but you don't really want to be drilling this year anyways, or not.
But we want to be ready for early in the year, and the best time of the year to look at flow through raises is before the end of the calendar. So usually the funds themselves, the amount of money that they have is usually maxed up about this time of the year because people are looking for reduction of their income tax obligations.
Mm-hmm. Knowing what you told me about sort of the complexity of the lithology and everything else, how much drilling would something like that need? And then again, forward looking, and this is to the best of your ability, a guess that I'm asking for, how much drilling would a VMS like this need in order for you to figure it out?
Once you lock onto a VMS, obviously the size will dictate the amount of diamond drilling that's going to be required, and the depth of it, the depth of the deposit itself. And I'll use as an example, there were known smaller deposits in and around the LaRonde, but the real big deposit was about 800 meters vertical. And that was the number 20 zone. So that was the big 58 million ton VMS that's, in my view, made Agnico Eagle. What's nice about these deposits is they're such high value, is they're company makers. So the Horn, like I said, made Noranda. Kid Creek made Texas Gulf. The LaRonde really made Agnico Eagle what it is today. Hud Bay, of course, their activity in the Lynn Lake, Manitoba area for VMS. So if you get a good one, it's a company maker.
Why I'm asking you that is because I'm thinking, what is the money they have right now, plus additionally the charity flow through that you're potentially looking to raise here before the end of the year? How much of an answer is that going to give us? Are we going to know whether the project is worth continuing on once that money is spent or not?
Yes, absolutely. Like I said, I'm not looking for a small deposit. It's not going to hide, unlike a gold deposit where you really require a very high intensity drilling to define a resource because of the nuggety effect of gold. VMS, once you lock into it, you know what you're dealing with right off the top. Mm-hmm. There's absolutely no guessing what the value proposition is when you see it in the drill car.
Yeah.
So,
right.
That's kind of like my perspective here.
But that's so you do think that spending that money is eventually going to get to that point where it's like, are we onto a VMS or are we not onto the VMS that you're looking for, and then whether to pivot or kind of not double down, but just increase your efforts.
Correct. No, I think my intention is to have a very cost-effective program to properly assess the potential. I mean, if the next phase, the diamond drilling we undertake, I think will be down about the deepest drilling right now on the Roger is about 325 meters vertical. Mm-hmm. I think effectively we see an off-hole geophysical anomaly. We're talking 500 meters, 200 meter spacings. In 8 holes, covers about 1.6 kilometers of strike length of the favorable horizon.
There's a big step out, 200 meters for or spacing for VMS. You typically see 50 to 100.
The radius of downhole geophysics is 150 meters from the axis of the hole. So really, there'll be, once you do geophysics in each of the holes, the signals overlap, or the detection limits of the system overlap. So really, you're not going to miss anything. If there's anything there, you'll see it between 200 meter holes.
Right. Going back to raising capital again, you've touched upon it, charity flow through. That makes sense for now, or the way that you've explained it to me. But in this market that we're in right now, what would you want to be doing in terms of raising capital in the future? Is it just straight equity and continue doing charity flow through, or is it maybe an asset level, a JV or a royalty or a stream or something else entirely, or getting in a strategic partner?
I'm glad you asked that question. I mean, we've got properties in the portfolio that we acquired as a result of the transaction with Kintavar. Mm-hmm. They're non-core. They don't necessarily have value to Kintavar, but they might have value to other companies that have an interest in them. So that can bring non-dilutive cash, shares. In the instance of our Anik gold property, it's a 75-25% joint venture with IM Gold. They're the operators. Ultimately, it's whether or not we want to decide to participate in the joint venture. Worst case, we get diluted down to a 10% net present royalty, and then net profit royalty. And if we don't participate at all, we have a 1.5% royalty NSR, which has a buyback equivalent to about $4 million. So that, again, there's avenues for non-dilutive cash that we can bring into Kintavar.
What is the timeline for making that happen, though? Because again, you have a lot going on. You just did that transaction, this work that you want to do. So it's kind of like a lot of stuff are up in the air a little bit right now. What's your timeline for potentially monetizing some of the legacy assets?
We're already having those discussions between myself and Stephen. I mean, we're talking to individuals that have expressed interest in some of the properties in the portfolio. We're looking at the possibility to expand our footprint at Roger, because I truly believe that we're not just dealing with a single one-off. Like I said, there's these deposits tend to cluster on a regional basis. And if we have success at Roger, I think the next step is to look along what we consider to be the favorable horizon to expand our footprint.
Mm-hmm. Are all of these other projects that you're mentioning here, what I'm calling the legacy projects, are they all work ready, as in permitting, community relationships, infrastructure, and everything else? Is that taken care of?
The Kintavar did a very good job with establishing favorable community relations. As a matter of fact, in the instance of our sedimentary copper projects, which we call the Mishi and the Wabash, there's significant local share participation in Kintavar, and they're very supportive of the work that was being undertaken at the time. There are other properties within the portfolio that that haven't been worked. They're small. They might be of interest to either adjacent landholders or companies that want to get involved with those specific areas.
Right. That's okay. That's something that we could probably talk about as well, if and when you have some of those news releases. Peter, typically what I'd ask sort of toward the end of a conversation is, what's the most fair criticism of your company? What's the most fair criticism of Kintavar right now that you've heard? But you probably haven't heard all that many because you've only been in the position for a couple of days. What about yourself? What's the most fair criticism that you had of Kintavar, or the deal, or the situation, or the project, or anything related to the company when you entered?
I've been in the exploration game and running companies and knowing the sensitivities of shareholders. And one of the biggest criticisms I usually have of companies is when they become too diversified, too spread out. Mm-hmm. And Kintavar's is, no disrespect, it was a model that they had established, but they had their sedimentary copper projects. They spent a lot of money on them. What they got day one exploration to the end of the exploration plans never changed. It was always sub-economic. They had a fishing camp because it happened to be in close proximity to one of the properties. So as opposed to building a camp, they bought a fishing camp, and they used that as a revenue stream in the off season for them. They had a combined, so they had a crew that undertook consulting, not only for Kintavar's properties proper, but for outside parties. And then when I think what happened is when they realized they weren't getting traction from their flagship properties, they started going on a staking rush. And every imaginable type of commodity, like lithium and nickel and gold and copper and lead. And so shareholders like nice, simple, focused exploration strategies. Is it a gold company? Is it a base metal company? Is it a lithium company? And I think got a little bit spread out. So I think the idea being is always have a specific focus of where you want to spend your money.
That is a fair criticism. That's a criticism I have of a lot of companies I look into myself for my personal portfolio. So it's a good point. I'm starting to get a better idea of Kintavar. There's a lot more that I probably have to know, and there's probably a lot that I'm forgetting to ask you. So for people listening, if I'm forgetting something, please let me know what it is. I don't shy away from asking whatever it might be. Send me your questions. I'll ask Peter about it in our next interview. Peter, what about yourself? What do you think I'm forgetting to ask here? What did you come here hoping to talk about that I failed to bring up?
No, I think we covered everything. I didn't know if we'd be able to get into the nitty gritty of the aspects of Roger, but I'm very excited, and I think our shareholders would be very excited for once we come out with some of the results of what we've seen so far and what we anticipate going forward. So.
Well, when you do come out with these results, we will sit down and we will go into the nitty gritty on the project. So again, for people, a reminder, let me know what I should be asking in those interviews. And yeah, I am looking forward to seeing how you push this forward, and I'm looking forward to our next conversation. But thank you so much for sitting down with me today.
Thank you. A pleasure. Have a good day.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias, again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing, and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."